I'm sure you've heard about the rule buy low, sell high. In this video I wanna show you what may stand behind these words and how to make use of that. But the problem is, you never know if the price is at its lowest level, cause it can always be cheaper. So how to judge if the stock is cheap or expensive? Here comes PE ratio, which is formed by dividing market value per share by earnings per share, or just market value by yearly earnings. I like to look at it this way: if the company would not reinvest any money, it wouldn't buy anything to make a bigger profit in the next few years, but pay it all as a dividend, how many years would it take to make me a 100% return? Here's an example. The market value of company A is $5 million, number of shares is 4 million, and earnings stands for 1 million a year. There are also companies B and C. To extract price per share, you just divide market value by the number of shares. In order of getting EPS, you divide earnings by, again, the number of shares. Then you divide price per share by EPS, and that's all. As you can see, company A is the best choice to invest in based on PE ratio. But don't forget, there are plenty of other indicators that you should analyze before making a decision. Okay, but which level of PE is good or bad? Benjamin Graham in his book Intelligent Investor says that PE higher than 15 is high. And I agree with that. I would say even more. I will probably never buy a company with PE higher than 10. If I had to define levels, I would say that below 5 is a great opportunity, 5 to 8 is pretty cheap, 8 to 13 is like standard level, 13 to 18 is pretty high, and over 18 is just really high. Very important fact is that PE works the best for developed companies like Microsoft or Intel. It's much less effective on developing companies like Tesla, where PE has reached over 1000 and people were still willing to pay more because you never know what is the real value of developing companies. If the company invests most or all of its income, the PE could be really high or not even exist. But be careful, the same happens on the other hand. If the company is doing badly and selling assets like stories or companies, the PE may be temporarily very low. That's why you should check PE at least few years back, or even use CAPE, which you will learn about in the next video. If you want to discover more useful ratios and investing content, subscribe and check my other videos. Feel free to ask questions in the comments. See ya!